Market participants are ready for a market boost today. Market sentiment on Wall Street depends on a variety of factors, such as a flood of macroeconomic data, escalating global risks, and the Fed's minutes, and the mounting fears in the corporate sector. InstaForex analysts have prepared their market analysis and forecast. Despite the cautions pre-market, the benchmark stock indexes closed with gains on Tuesday. Moreover, the S&P 500 closed at the strongest level since September 12. The S&P 500 climbed to 4,000 points yesterday, with the intraday growth of 1.36%. The Dow Jones added almost 400 points, or 1.18%. The Nasdaq closed 1.36% up, and the key stock indexes are trying to retain optimism in the New York pre-market, trading higher. Amid the variety of driving forces, the S&P 500 is expected to trade in the wide intraday corridor between 3,890 and 4,090 points. Wall Street had a successful session on Tuesday. On the one hand, dovish comments by Fed policymakers inspire hopes for the moderation in monetary tightening in December. On the other hand, robust retail sales dampen such hopes. Besides, oil prices are developing a steady rally. In this context, the S&P 500 closed at the highest level in the last 2.5 months. U.S. retailer Best Buy dispelled fears that high inflation could be to blame for sluggish retail sales in the Christmas season. Best Buy's shares slipped 12.78% after the retailer had predicted a lower decline in its annual sales than in the previous forecasts. On a Wednesday, futures on the U.S. stock indexes traded cautiously in anticipation of the Fed's minutes. Investors want to have a clear vision of the Fed's agenda for monetary policy. Investors are confused by recent remarks from the FOMC members Loretta Mester and Esther George. They provided mixed comments on the further pace of rate hikes but confirmed the Fed's commitment to its struggle against inflation. The trading volume will go down on Thursday, ahead of a Thanksgiving Day, which is celebrated on Friday. Wall Street will be open half of the session on Friday. Apple shares slipped 0.7% in the pre-market because hundreds of employees joined protests at the flagship iPhone facility in China. Some video cameras and windows were smashed. HP shares rose 1.4% after the hardware manufacturer announced that it plans to dismiss 6,000 employees by the end of 2025 fiscal year. As for the economic calendar, the U.S. durable goods orders increased by 1% in October from a month ago, following a 0.3% rise in September. This score surpassed the forecast for a 0.4% growth. The latest score has been the strongest one in the recent 4 months. Besides, durable goods orders, excluding aircraft, which serves as a barometer of investments in equipment, climbed 0.7%, having rebounded after a 0.8% fall in September. The reading is also better than expected, as economists had projected a flat figure. Later today, investors will get to know U.S. new home sales and the PMI by S&P Global for November. The cherry on the cake is the Fed's minutes. Investors are braced for a volatile session. The US dollar is awaiting the Fed's minutes in a gloomy mood, having shed 0.3% in today. The index again sank below 107 points, and the intraday corridor is defined between 105.90 and 107.80, depending on the economic data and its influence on the market sentiment. According to the FedWatch tool, the current consensus suggests a 75% probability of a rate hike by 50 basis points. Loretta Master also advocates for this scenario, hence the US dollar is losing its footing. Apart from strong durable goods orders, the labor market looked an unexpected increase in the first-time unemployment claims. The number of Americans filing for initial unemployment benefits grew by 17,000 to 240,000 last week. It's the largest growth since August and way above the forecast for 225,000 new claims. This sharp increase indicates that the labor market is cooling down because the Federal Reserve has raised the official funds rate by 375 basis points since March. A lot of data is still ahead, capable of boosting optimism and pessimism. Despite weakness in the US dollar, the loonie is unable to regain bullish momentum. The USD CAD pair edged up 0.38% intraday to trade at 1.3424, having erased gains of the previous day. The currency pair is likely to trade in the corridor between 1.3390 and 1.3520 today. Oil prices failed to develop a steady rally. The benchmark rates rallied by more than 1% on Tuesday, but slumped almost 3% on Wednesday. Oil prices declined because G7 countries discussed the Russian oil price cap above the current levels at which crude is trading now. Citing a European official, the group of 7 nations, G7, is looking at a price cap on a Russian seaborne oil in the range of $65 and $70 per barrel. A high-ranking official from the US Treasury said that the price cap would be adjusted a few times a year. In this context, Brent futures stumbled 4% to $84.42 a barrel, and WTI futures sank 3.7% to trade at $77.91 a barrel. Under such conditions, the commodity-reliant loonie is unable to assert its strength. The crypto market is trading higher slowly but surely. Bitcoin has gained 2% intraday to trade at 16,400. Popular altcoins are also gaining ground. Curiously, crypto investors have no reasons for optimism today. Citing the Wall Street Journal, a lawyer at FTX said that the lion's share of assets belonging to the bankrupt crypto exchange either disappeared or were stolen. Another statement comes from Genesis. The cryptocurrency broker warned investors that it may declare bankruptcy if it can't raise at least $1 billion for its loan business. Crypto assets seem to be exhausted by bad news. Meanwhile, they are seeking some stability in new trading ranges. Bitcoin is likely to trade in the middle of the range between $15,500 and $17,200 today. InstaForex team reminds you to be alert to more economic data later today. So, financial instruments are going to make sharp swings. Good luck and see you tomorrow.